This property report is powered by realestate.com.au. Know the value of your home today. Track your property now.
To property now, and while the Reserve Bank left interest rates on hold at their record low of 0.1% this week, that wasn't the key takeaway of the board's decision. Joining me now live from realestate.com.au is John Healy. John, good afternoon. The RBA really gave its strongest indication yet that rates could rise earlier than it had previously indicated.
Yeah, that's right. Well, the RBA left rates on hold again this week, meaning that they've been at their record low of 0.1% now for 12 months. That wasn't the entire story, with the central bank now really for the first time leaving the door open for interest rates to rise earlier than their 2024 guidance that they've previously provided. And on Tuesday, RBA Governor Philip Lowe said that borrowers need to factor in a potential early rate rise into their calculations. But he said he didn't expect rates to begin rising as early as next year, but said rates could potentially go up in 2023, although he did maintain that 2024 remained the most likely timing at the moment. And perhaps the key indicator that an earlier than expected rate rise is on the cards is the RBA putting an end to its yield curve control policy this week, which has been a key economic support measure throughout the pandemic. And that's largely been abandoned as a result of improving economic conditions and a better than expected pathway and progress towards the bank's inflation target. But Mr. Lowe did say that that rates wouldn't begin rising until inflation was sustainably within that 2 to 3% target range. And in terms of what it all means for property, well, financial markets have been penciling in earlier interest rate rises for some time now, and many banks have already begun raising the rates on longer-term fixed-rate mortgages as well, and that's expected to continue. But so too are the strong housing market conditions that we're seeing at the moment, certainly in the short term, particularly as more vendors come back into the market in Sydney and Melbourne, and buyer demand remains high.
And John, on the topic of those strong market conditions, if this weekend's auctions numbers are certainly any indication, November is going to be a busy month of activity.
Yeah, that's right. November is actually shaping up to be the biggest month of sales for 2021 as those vendors around Sydney and Melbourne return to the market now post-lockdown, and auction numbers remaining very strong. We're expecting just over 3,000 homes to go to auction nationally this week. That's around 132% up on auction volumes at this time last year. Sydney expecting some big numbers this weekend, just under 870 homes set to go to market there. That's an increase of 13% week on week and 78% up on auction volumes in Sydney this time last year. Melbourne expecting also another big auction weekend, just under 1,200 homes set to go to market in Melbourne, which is nearly 200% up on auction volumes in Melbourne at this time last year. And the suburb of Reservoir in Melbourne's northern suburbs is expecting 26 auctions alone this weekend. For the second week in a row, Brisbane and Adelaide both have more than 200 auctions scheduled in each, and the ACT is up over 100 auctions again this week as the final month of the traditional spring selling season gets underway.
And turning our attention briefly back to last weekend now, how did auction markets perform around the country?
Well, on the auction results available last weekend, clearance rates remained very strong around the country again. Sydney, Adelaide and the ACT all had clearance rates up over the 90% mark. Sydney's number was flat again week on week, and actually numbers were down in all other markets that we can see here compared to the week earlier, particularly in Melbourne, which was down around 2% week on week, but likely a result of just the huge volume of homes that are going to market in Melbourne at the moment.
And just finally, John, the most popular homes this week appeal to buyers with vastly different budgets. Take us through it.
Yeah, they really do. There's almost something for every buyer's budget in terms of our most viewed properties this week. The top 5 dominated by homes in Victoria and South Australia, and a guide starting there at $420,000 and one right up topping out at $16 million. So potentially something for everyone. Also in common, these homes are all on big blocks again this week, all mainly on blocks up over 1,000 square metres. But let's take a quick look now at the most viewed home of the week in Toorak in Melbourne. And this is a stunning 5-bedroom, 7-bathroom French-style property that's actually being sold by Beck and Leighton Hewitt. They reportedly bought this home back in 2016 for around $12.7 million, and now clearly looking to move on. But this home has all those luxury features that you'd expect a home like this to have, including an 1,800-bottle wine cellar, a home cinema, swimming pool, some great entertaining areas indoor and out. And this property is on the market via an Expressions of Interest campaign that's wrapping up on the 23rd of November, Danica.
Yeah, beautiful natural interiors. John, thank you. See you again next week.